Want my latest market insights? My latest report, Uranium Trend is En Fuego, is now available. Scan this QR code or click on the link in the description.
Well, we definitely have a lot to talk about there as it relates to the macro winds of change. First and foremost, we started getting into gold back in the November 1st, 2023, when Fed pause and Yellen Yahtzee started becoming a thing, which is basically loose monetary easing. And then you saw what happened in the spring of 2024, where gold finally broke out of a massive base, and then silver followed the next month. And I'm very fortunate to work with a classical economist by the name of Jeffrey Fouvray, who is brilliant and very, very well versed in emerging markets. So he saw this as a transition to fiscal dominance long before it became a catchphrase in the media. So he's very, very well versed. And basically this orchestration by the White House, by the way, then Biden, now Trump, but the White House, Treasury, and Fed to continue to suppress yields and try and evade the fact that the value of the dollar was at risk through this dual deficit of trade as well as fiscal. So unless or until our U.S. trade and or fiscal situation is restructured and under control, this is a beautiful tailwind for gold against the de-dollarization move with BRICS, where China in particular, not just hoarding at the central bank level, but also settling trade outside of the U.S. dollar, outside of U.S. treasuries, outside of the petrodollar, is giving fuel for the fire of this run. And then, of course, it morphed into something much, much bigger of late, which is after all of this additional follow through with precious metals, which gold, by the way, always leads, it then goes into industrial metals, right, from precious to industrial, and those are all very inflationary. And we've had outperformance by the miners, which have been a fabulous sector rotation theme since spring of 2024. And they're now in a parabola, which is where I just warned recently, as you know, take care, because this rate of change in the price appreciation for precious metals, once it stalls, it will pick up wind on the downside. And we have lots that we can cover regarding why it has picked up so much energy, but in large part, it is this combination of the debasement trade, the de-dollarization trade, the devaluation policy by the Trump administration. Even before he was elected, he said, I'm going to do tariffs. And the more the dollar falls in value, it was overvalued, the more tariffs he raises. So this was a policy feature. This is not a bug. So, and you notice what happened in the spring of 2025. We had a big drop, not only in the dollar, right? We're down like 11% in Dixie year to date, but also in equities and in bonds. So they're not buying longer duration notes and bonds because the Treasury keeps stuffing the short duration, which is liquidity fueling for the equity markets, but it is also a debasement on the dollar, which is also helping this equity melt up. It's all related, long story short. So China's settling trade outside of the U.S. dollar and does not plan to buy U.S. treasuries, does not need the petrodollar, which is related to oil, right? They're bypassing and going Iran, Russia, etc., but also they are stimulating their economy by migrating away from oil and into electric vehicles, which is a massive stimulus for their country. And they're continuing to settle trade in gold outside of the dollar. So the trend isn't going to end as far as the macro tailwinds. And now you've got wirehouses, the JP Morgans and the Morgan Stanleys here in the US saying, okay, now we're underweighted in these, gold and silver holdings. We need to increase our allocation from 5% to 15 to 20%, right? They're not saying that about crypto and Bitcoin. They're saying that about gold. So I think that this is part and parcel of this race to get exposure. At the same time, Trump fired Lisa Cook, a Fed governor. And on that moment, after gold had consolidated from literally April until August, you saw the September breakout in gold, which has been nonstop. It's been breathless. Silver follows. It's been breathless. So this removal of Fed independence, this threat by firing a Fed governor, is unprecedented, right? So that is also what triggered some of this most recent bid in precious metals. And now we've got a trade war, and Fed can't print precious metals. They can't print rare earths. They can't print batteries. They can't print any of the things that we really need for this expansion of our AI data center build out and the rest. So folks are getting wind of this and seeing that gold is really the best alternative to a very leaky ship, which is in fact the U.S. fiscal spending and treasury market and dollar.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.